Your market news now. This afternoon, investors will look for more clarity on U.S. interest rates from the Fed Chair Jerome Powell after mixed messages from a host of U.S. central bank policymakers. The Fed officials maintained a balanced tone on the central bank's next decision, but noted that they would focus more on economic data and the effect of higher long-term bond yields. Meanwhile, when we look at the markets, Japan's Nikkei flipped from early gains to be down 0.1%. Chinese equities also fell as the respite that was offered by some bullish comments from the People's Bank of China governor proved short-lived. Hong Kong's Hang Seng Index dropped 0.6%. Wall Street futures pointing slightly lower following gains across the big three indexes overnight, led by a 0.9% rally from the tech-heavy Nasdaq. To give us a little bit more detail when it comes to the performance of the markets, we are joined by Chantal Marx, who is from F&B Wealth and Investment. Chantal, thank you so much for your time. Let's have a look at what is happening from a market's perspective, because on the one hand, you have a lot of analysts who are quite sensitive to the possibility of more hikes, and yet on the other hand, you have those who are saying that the tightening cycle is done. Which camp are you in, and what signals are you picking up to support that view?
I think that the conflicting views really is what is translating into market volatility at the moment. We're in the camp that the rate hikes have come through and they are done in most economies, especially the major economies being the US and Europe. But we are still thinking that there could be a recession coming in the US, and whether or not that is a soft landing or a hard recession, that I think remains in question for us. But we think that probably markets ran a little bit ahead of themselves for risk assets, at least towards the end of last week, because there's still a lot of uncertainty out there. And if there's a recession coming, then we haven't seen the bottom of markets yet.
On that note, then, do you think markets will eventually digest the pain that's associated with a move in Fed funds rates that's gone from 0% to 5.5%?
Yes, we've already started seeing some evidence of that. What we are seeing is that US consumers, for example, even though they're not as impacted by mortgage rates because they mainly have fixed mortgage rates, they are taking up more consumer debt, they are taking up more credit card debt, and that is really where things are starting to bite. We also have the US consumer having to start paying back student loans again. And when you look at kind of more interview style evidence, guys are struggling over there. So that slowdown definitely is coming through, and higher interest rates are starting to bite, perhaps not as directly as they do in the South African context.
Given what we've seen in bond market moves over the past 2 weeks, do you get a sense that this equity market is still at the mercy of bond markets?
Yes, absolutely. The equity market is at the mercy of the bond market. It's at the mercy of the Fed, and to a certain extent, also up to this. It is also still dictating a little bit of its own future. Right? When we look at something like a U.S. corporate earnings season. So, if you look at the companies, particularly in the U.S., that has outperformed over the last few weeks and months, those are the companies that have performed well, that have showed good earnings growth, that has managed to rein in costs, and are probably a little bit more defensive from a growth perspective. Similar story playing out in South Africa. Companies here that are doing well are the ones that have really strong balance sheets, strong cash flow, decent moats around them, so not a lot of competition in their space or their market leaders. Because ultimately, I think that is where the long-term value is determined, because the short-term volatility is going to be there, but you can kind of sustain or kind of shield yourself from some of those shocks if you have those characteristics as a company.
Building on that, are there sectors locally that have outperformed or at least surprised you?
Yeah, so I mean, obviously, gold's outperformed because we are also in a geopolitical crisis globally. And when I looked at the sectors overall, the insurance space really stood out to me. And within the insurance market, South Africa is in a lucky position to have companies listed on the JSE that are exceptionally well capitalized. And I think at the start of the year, they were offering really good value, and that is why that sector did particularly well this year. Then there are other sectors or kind of subsectors within the consumer discretionary space that surprised me. The schools doing very well, or the private schooling and private university companies doing exceptionally well this year relative to the rest of the index. And travel and leisure staging a really nice rebound from the COVID-19 period that had a marked impact on profitability in that space.
I want to hone in on what you're saying. Is there a stock that is worth watching, and why is that, and whether the stock is one that is performing really well or has underperformed?
So one of the companies that did not react very positively late last week to the kind of the short-term rally that we saw on the SAX side was African Rainbow Capital. They have some really solid investments in South Africa, and also more recently a little bit more offshore exposure through Time Bank. And that stock has just continued to move downward. Now, I'm thinking that one of two things is going to happen here. Either the market is going to start valuing this thing at a more reasonable level relative to its net asset value, or the company is going to delist. And how it's going to delist would be an offer will be made to shareholders. So that's definitely one that's on my radar at the moment. Something has to give. It's just way too cheap at the moment.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marx, who is from FNB Wealth and Investment. And looking at the rand right now, currently trading at 18.48, weaker ahead of Fed Chair Jerome Powell's speech, who is expected to speak both today and tomorrow. And in the absence of local economic data, the rand is likely to be getting a lot of the drivers coming through from the global side of things. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.